Hey guys, it's Chris Lamm here with Commerce Home Mortgage. Are we at the end of record low interest rates? You know, that's a question a lot of people are asking right now. We're going to talk a little bit about that. We're going to talk about what's going on with inventory in California, specifically Redding, and we're going to also talk about what we see going forward. So the first thing is the biggest topic right now that we're talking about is what happened to mortgage rates. This is the first week of March, and if we look back at the first week of February, interest rates are almost a full % higher than they were a month ago. And this all happened really fast and nobody expected it. And we want to just kind of explain it a little bit. The first thing I want to tell you is that most people think that the Federal Reserve, who has been coming out and saying they're going to keep rates at 0%, that actually doesn't directly impact mortgage rates. Mortgage rates are based on mortgage-backed securities that are sold on Wall Street that are often referred to as bonds. And depending on what those bond prices are selling for on any given day on the stock exchange is going to determine what your 30-year or 15-year mortgage rate is going to be at. So what's happening right now is we're seeing a lot of people stepping away from purchasing those bonds. Generally, bonds are sort of a safe haven for investors. If they're worried about the volatility of stocks, they're going to buy bonds, and that's going to keep rates low. We're seeing a lot of those investors pulling back over the last few weeks, causing interest rates to go up rapidly. Currently, the 30-year fix is between the low and mid threes right now, and it was in the mid twos just a couple weeks ago. So, why is this happening? I wish I could tell you. A lot of people in the industry are looking at this, wondering why, and there's not a lot of great explanations. The best one that I've heard is that there are starting to be some serious concerns about inflation coming in the summer or even going into the fall, as a result of the stimulus that the new administration is creating. But there could be a lot of other factors that are playing into this. What are the plausible outcomes that could happen from here? Now, the first outcome is we could see the Federal Reserve step back in, recognize that the mortgage rates are having an impact, start stimulating by purchasing bonds from the government. This is often referred to as quantitative easing, where the government is actually stepping in and buying the bonds on a daily basis to artificially push interest rates down. But there's a very good possibility they're not going to do that. I've heard some people say that the government, when they're creating a 1.9 trillion stimulus, they're going to have to find a way to continue to debt service this deficit we've created. And the only way to do that is with higher taxes and bond prices paying the government back, which is higher interest rates to you and me. So the other outcome is we could see rates go up and stay up for quite some time. And that's going to be an interesting thing right now because the home prices, as many of you have seen, have really climbed and benefited from all-time low interest rates. And as we see rates go up, what does that mean to a borrower's ability to buy a house, their purchase power, and their payments? You know, we'll have to watch and see. We still have record low inventory. And so there's a lot of people coming into Redding that want to live here, that want to get out of the city. Last time I checked, there was like 350 or less homes for sale in Shasta County. And, you know, many people are buying homes well above asking price, paying cash. And, you know, I'm not so sure that rates going up into the mid threes, which is still all-time low interest rate territory, I'm not sure that's going to really slow people down, but we'll have to watch and see what happens from here. The last thing I want to touch on as we go forward is the stock market. Now, I'm not a stockbroker. I don't give stock advice, but I do watch the stock market every day. I'm an investor, and being a mortgage banker, mortgage rates are directly tied to what's going on in the stock market. Generally speaking, when the stock market sells off, the bond market benefits from that, and we see rates come down. And right now, we're in a very interesting time where we're seeing some volatility in both stocks and bonds. So hopefully this shakes out. Maybe by the time this video actually gets posted to YouTube, some of this has sort of resolved itself. But we are at a pretty interesting time right here in March, and we're going to be keeping you updated going forward with what happens from here. Forgive me as I look down from here. The last thing we want to just say is thank you guys so much for the continued support. About 90% of the clients that we have the privilege to serve here in Shasta County are people that we've worked with in the past or someone that's been referred to us by people we know. We just want to thank you so much for continuing to support us through the last few years. As always, if there's any questions you have about anything real estate or lending related or anything else for that matter, feel free to give me a call here at the office. I hope you and your family are doing well. God bless, and we'll talk to you soon.